Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we talk about the latest trends of the stock markets, help you understand the key sectors and the stocks that are buzzing in action today, and what should be your investor strategy on all of these stocks and sectors. We'll also be joined by an expert, but first up, the quick update on how the markets are trading at this point in time. Well, throughout the first half of trading session, we have seen a kind of subdued movement as far as the benchmarks are concerned. The Nifty and the Sensex are slightly on the lower side today. 18,395 for the Nifty. It's down just by about 15 odd points. The Sensex hovering near 61,954 at about 26 points on the downside as well. Even if you look at the mid cap and the small cap, the broader indices, there is slight weakness right there as well. Both the mid cap 100 and small cap 100 indices are down by about 0.2% each. Also, when you talk about the other sectors, the Nifty Bank is slightly lower today. Realty space is down by about 0.5%. IT stocks are actually dragging the most, 0.8% of a cut being seen on the IT pack. Apart from this, if you also see, there are slight declines coming in on the metal pack, on pharma. Even on autos are also down by 0.8%. So the big drag factors coming in from IT and from auto and from the slight realty pack and some of the banking majors as well. The only two outliers in the pack today are the PSU banks that are holding up into the green and the FMCG space stocks that are seeing some recovery after the sharp decline that we saw over the last few trading session. In terms of the top gainers today, you do have some capital good names like L&T topping the charts, 2.2% up in trade. Also, when you talk about some of the other stocks like Tata Consumer Products, HDFC Life, UPL and Adani Ports, these are the top gainers in trade today, up about 1 odd percent. You can see them on your screens as well. On the losing side, you do have some names which are again from variety of sectors. You have auto names that are down like Eicher Motors, Tata Motors is down in trade. You have Titan that has been slowly and gradually inching downwards, 2% down as well. Apollo Hospitals and Hindalco, the other losers in trade. Let's now welcome our guest for today, Nilesh joins in from Centrum Broking, the expert at technicals and derivatives. Welcome, Nilesh, and thank you so much for taking the time out. Well, yesterday we actually we saw the Nifty Bank inching towards those record levels yet again. The Sensex closing at record closing highs as well. So the momentum is, we are hoping and keeping our fingers crossed to see those all-time high levels and perhaps those fresh records on the markets as well very soon. But every day we do see some consolidation in the first half and then the movement in the last 1.5 hours. Your thoughts on how the markets you expect to pan out going forward?
Very good afternoon, Sakshi. Well, we have rightly mentioned and pointed out that consolidation that we are witnessing, it seems to be that going forward, we are likely to see this kind of consolidation to continue. Reason being, we are trading at over territory, given the fact that we have already seen a good run up from the 70,000 level to almost 18,400. So Nifty is slightly 150 point away from its previous all-time high levels, which I believe going forward it is likely to hit a fresh all-time high levels in the November series itself. I won't be surprised if we see all-time high levels in this expiry this particular week as well. So overall, the momentum is looking positive, although this kind of consolidation, which are a healthy sign, which cannot be ruled out, and any decline towards 18,000 could be a good opportunity for fresh entry. At current level, the risk and reward is definitely not favorable and not supporting for the long position, wherein stock-specific action that what we are witnessing is likely to continue further. On the other hand, if you look at the Bank Nifty, which is trading at all-time high levels, and today as well, it is sustaining well above its 42,000 psychological support mark. And as long as it trades above 42,000 mark, we are likely to see further continuation of the up move, and upside is very much open for 40,000. The important point that here I want to make is that in last couple of sessions, we are outperforming the global market. In spite of the weakness that we are witnessing in the global market, we are showing resilience. So that is certainly a positive sign. Lastly, if you look at the volatility index India week, which is very much in the comfort zone at 15 levels, and that is basically indicating we may not see major up move or down move from the current level.
Okay, understood that. Well, the markets, as you say, like the suggested strategies, you must definitely follow from Nilesh as well. Let's now focus on the particular stocks that are on our radar today. And I'm talking about the new age stocks, Paytm and Nykaa, both of which have actually slipped up to 10% in today's trading session. And that's amid the reports of block deals after the lock-in expiry this week for the pre-IPO investors in both these counters. In fact, Paytm shares fell up to 10% to touch a day's low of even 40 41 amid the reports that SoftBank Group is eyeing to offload shares in the Paytm operator 197 Communications, and there are reports that up to 295 lakh shares of Paytm have changed hands as well in bunch trades. Now also this was in the lower end of the price range as reported as well. Similarly, when you talk about Nykaa, these shares also cracked up to 7% in today's trading session, touched a low of 171 odd. In fact, there are reports that multiple bunch trades have also taken place here. Let's first now go across to my colleague Tanya Aneja, who actually has the details of what has really happened in these two stocks, particularly over the last few trading sessions, to really understand what kind of sell-off have we seen post the pre-IPO lock-in ended. Take it away, Tanya.
Absolutely, Sakshi. So shares of Paytm took a beating today, as you rightly said. It tanked over 10% amid reports of block deals after the lock-in period expired for pre-IPO investors. Now, there are reports that SoftBank may have sold $215 million worth of Paytm shares in a block deal. The price range for the sale was set at 555 to 601 rupees. Now, remember, SoftBank had a 17.5% stake in the fintech company, and it is now important to note that there is a 60-day lockup period for further stake sale by SoftBank. Similarly, Nykaa shares also cracked 7% today. Now, according to the reports, around 2% of the company's equity changed hands in 5 bunch trades today. Yesterday also, Lighthouse India Fund also sold around 3 crore shares of the company at an average traded price of 175 rupees. Now, the one-year lock-in period for Nykaa pre-IPO shareholders also got expired last week. The scrip also turned ex-bonus the same day, and since then, the scrip is seeing heavy volumes. Remember, on 11th of November, Morgan Stanley Asia and Society General also purchased a stake in Nykaa, according to the block deal data available on the Bombay Stock Exchange. Now, shares of Paytm have tanked over 58% in 2022 so far, and Nykaa is also down over 48% in the same period.
Absolutely. Well, thank you so much, Tanya, for giving us all those updates. Nilesh, you heard Tanya as well. She's given us all those details. Help our viewers really first understand, why are there these huge bite deals taking place in these particular stocks? Is it only because of the lock-in period for these has ended? Was this already expected as well?
You've rightly mentioned, Sakshi. First, we need to understand the valuation they have got at the time of listing was very high. Reason being, markets were trading at all-time high levels a year back, and looking at the higher valuation what they got at listing price, this kind of correction was very much due and very much expected. Now, certainly, this loss has widened. If you look at in terms of the Paytm number, and that is certainly adding fuel in the fire. If you look at the technical structure as well, we have seen a crack almost from the 1900 level to the levels of near about 500 in the month of March, in the month of May respectively, and twice it has formed a bottom. And also we have seen a smart recovery as well, due to which it reached the levels of 850 odd levels. And after reaching those levels, we have seen a gradual decline, and this kind of decline is very clearly shows that there is no visibility in the profit making for the company. Even management has itself said that it is unfair to expect profit from the company like this. So looking at the overall structure, even technically, I believe there will be further downtrend which is likely to continue. Today there was a gap down opening. It looks like a breakaway gap, and this further downtrend may extend further towards 500 mark. That is another 10% downfall is very much due on very much on the card. So first of all, my strategy to those who are already holding the long position should keep a strict stop loss below 500. And if at all we see any pullback towards 600 to 650, that's a good exit level and exit on rallies. And for new investor, it is better to avoid for the time being. There is no visibility, as I mentioned. And the SoftBank, in fact, they are also exiting at loss. So they were very much waiting for the lock-in to get over, and it looks like a very much desperate exit from the investors. So that's certainly not a good sign. And see, new investor would only come if they see free cash flows in the very near term. That is certainly not visible. So due to which I believe new investors should definitely refrain from creating any sort of long position at current level. We may see further downtrend to continue, specifically in the Paytm counter.
Okay. The question is how much more will these pre-IPO investors really look to offload from here? And also, investors are worried about one more thing, and that is that every time these pre-IPO investors look to offload more shares, do these stocks stand the risk of even falling more from here? What would your thoughts be?
Well, as I mentioned, the first answer to your question is that we are not sure whether how much they will offload their further positions,
Yeah,
but looking at the exit they are making in a desperate way, and that certainly shows that going forward we are likely to see further offloading of the positions. And if at all, that's why I said if at all, if we see any pullback, utilize that pullback to exit the
correct.
position. There are better opportunities in the market. The market is very broad, and you will get better stocks where the companies are basically profit making. So these are basically loss making company where loss is constantly widening. So that is certainly not a good sign, and I hope the investor may not be happy with that. So going
Yes.
forward, I believe that we are likely to see further drop in the prices. If at all it reaches 500 mark, then I won't be surprised the stock touches the 450 and 400 levels going forward.
Okay.
So better to use the pullback as an exit opportunity.
Okay, that's an important point that you made. You were also talking about the earnings visibility, and that's an important point that all the investors must consider as well. Let me just bring up some of the facts that we've already seen in the Q2 earnings. Now, Paytm's loss, in fact, widened in Q2, while the management is still confident about breaking even in EBITDA terms in Q2 of FY24. Talk about Nykaa that reported a multi-fold year-on-year growth in Q2. Paytm now continues to improve its revenue and margin profile, but on the other hand, when you talk about the profitability, that still stays for Nykaa going forward. But I want to understand from you, have you understood any kind of positive signs that have come about in both these earnings?
Comparatively, I believe Nykaa is slightly better placed. Reason being that company is still making profits. So it is important for a company to continuously generate the profits. And even if you look at the only caveat as far as Nykaa is concerned that I have is the margin. We are constantly witnessing a huge amount of discount that they are offering. So certainly their margin is going to hit. And the business is not that sustainable looking at the competitive environment that they have. And also the company has the zero dividend yield, and company is not paying any sort of dividend. So that is again not a good sign for the organization. And as far as levels are concerned, I'll tell you technically first, we have seen a gradual decline similar to Paytm in Nykaa as well. It got listed and it moved near about 420 levels post listing. And since then, we have seen a constant decline. Any pullback that we saw in between that got sold into. And now,
Sure.
after bonus announcement, I'm talking about the adjusted price. It has recently made a low, I would say a multi-week low that is near about 165 to 170 odd levels. So that will act as a crucial support and immediate support. So at current level, those who want to play contrarian and take a contrarian bet, one should keep
Okay.
a stop loss below 160. It's purely from a trading perspective, trading bet. I'm not expecting any V-shaped recovery in this particular counter. But for the time being, we can expect a pullback towards 200 to 205. Again, I would say that is the good entry, good exit level. Those are already holding the long position should think about exiting near about 200 to 220, or maybe at least review the position once it witness a good pullback.
Okay. Now, as far as both Paytm and Nykaa, there is a different view that you've shared. One on Paytm that there could be further sell-off if the 500 rupee mark is broken on the downside as far as Paytm is concerned. On the other hand, on a technical basis, just for trading perspective, you believe that there could be some short kind of a bounce on Nykaa. On the one hand, you have recommended a buy call on Nykaa at these lower levels and exiting at a higher position. On Paytm, you do expect that the stock could actually fall more. But I want to understand, 50%, 65%, that's the kind of fall that we have seen throughout this year so far. Does it mean that, every time we talk about that this stock is trading 50% on a discount from where it was, most of the investors actually look at it as a buying opportunity. And, they think that the stocks are on a discount and I could be getting a good entry point. What would you really advise those investors who are thinking this way?
Well, first you need to understand the valuation they have got at the time of listing. As I mentioned, the markets were trading at all-time high levels, and these new age stocks were in a were buzzing at that point of time, and they got extremely high valuation. And
Yeah.
that's why markets have certainly discounted that factor right now. And if you look at valuation point of view, although they might looking attractive, but still the major concern for both the stock is that there is a shrinking of the profit. In fact, Nykaa, although it generated profit, but future visibility is slightly missing. Looking at the competitive environment they are trading in, so that is the reason I said from a longer term perspective, both the stocks are better to avoid. Pure play from a trading perspective, Nykaa can be traded and Nykaa can be bought for a pullback. Looking at the numbers, the recent number that they have posted, the only concern that we have seen is that they have announced bonus, and after bonus we have seen retail participation in this particular counter, and due to which recently we have seen a spurt, and it moved towards 280, 218 to 220 kind of levels. But I think for sustainability of this particular move, you need to constantly make profit and margin should improve. So that is the only concern that we have from a fundamental perspective. And technically, as I mentioned, the Nykaa is relatively better compared to Paytm.
Okay, but long term, still you don't want to take any call on a long term buying opportunity. These are not the stocks to really look at from that kind of perspective.
Right, Sakshi, as I mentioned, I would rather prefer to hold economy rather than trading in new age stock where I don't understand the business model where they are constantly making losses. And as I mentioned, there are better opportunities very much available in the market, which are still available at a very corrected level. Specifically, if you look at the banking space, where counters like Federal Bank, ATK Bank, even if somebody wants to play in large cap counters like ICICI Bank, that particular counter can be bought at corrected level. And so these are the stocks which are available. In fact, I'll definitely share my stock ideas as well, where you will get a good dividend yield as well. So that is the good criteria to judge a stock where company is constantly providing dividend.
Right, absolutely. Well, thank you so much, Nilesh, for helping all our viewers really understand what's the right way to approach these two stocks that have been under selling pressure due to multiple block deals coming away after the pre-IPO lock-in has ended. Thank you very much for sharing all those insights. Let's quickly move on to see the quick update on markets as of now. 61,920 for the Sensex right now. It's just about 65 points or down. Right now, when you talk about the Nifty, 18,388 at the moment. You also saw quick update on Paytm and Nykaa shares. Nykaa shares are in fact moving into the green as we speak right here. But still, as Nilesh really pointed out, in case you're looking for a trading opportunity between the two, it's going to be Nykaa for you. But at the higher levels, look to exit your positions. Paytm, he still expects can actually go down further. Once it breaks the 500 level, could go down even to 400 kind levels as well. So keep an eye out on that. His whole idea is to actually look at some positive stocks from the other spheres where are actually showing some good fundamental promise in case you're looking for some opportunities at this point in time. Many thanks for tuning in for now, but do stay tuned on to Business Today TV for a whole lot more coverage on business news and on markets as well. Many thanks for tuning in for now.